On All About Stocks this week, massive profit booking seen on Dalal Street. We'll tell you why this is an opportunity for you to buy. Our investment advisor Chokkalingam tells you why you should be investing in JAY Bharat Maruti for the long term. And Chokka has made a profit of 102% on his portfolio. We'll tell you how he did it and how you can make similar returns. Welcome to All About Stocks. Thank you for tuning in. I know you think we've had a bad week at the markets, but we haven't really. What this is an opportunity for you and I to buy stocks. This is the opportunity we've been waiting for a very long time. What we're going to do in this half an hour is we're going to narrow down a list of the stocks that you could be buying in the week to come to make the most of the correction that we've seen in the market. We'll also answer the questions you sent in during the week. Remember, our email ID is at the bottom of your screen, and you can reach me personally on Twitter. To bring you up to speed with what happened, I have Ajay standing by with all of the action on Dalal Street. Ajay.
The benchmarks as well as the broader and the mid-cap stocks, all of them have given anywhere around 2 to 3% on the downside. Even if you look at the composition of the market, of course, the fall was led by financials, the high beta space, but even other sectors, talk of capital goods, power, utilities, oil and gas, all of them were, saw some damages this particular week. Well, the biggest reason and the culprit to change the investor sentiment, not only in India but globally, is the sharp rally in dollar. In fact, dollar is trading at the highest levels versus the euro in almost 12 years. That had a cascading effect on emerging market currencies and our own Indian domestic currency, which is the rupee. So that triggered risk off globally, and we also had to pay the price of that. Look at how the structure of the market has completely weakened right now. We almost went to 9100 last week and then have shaved off around 400 points on the Nifty alone. Bank Nifty around 2000 points, and Sensex too has witnessed a lot of damage. So the higher levels, the elevated levels are not getting sustained because fresh buying is not emerging. In fact, profit booking is coming on every rises. Not only that, the money market indicators have also turned extremely weak. The rupee right now is trading at 3-month lows. The 10-year bond yields, which are falling and led to a sharp rise in Bank Nifty, has also reversed and in fact hardened to 2-month highs right now. If you look at the good thing is, of course, the fall which is being witnessed in the Indian market is not really backed by very high volumes and is also not backed by very large outflows from the FI community. If that happens, then there is definitely something to worry about. This is fresh shorting which is happening in the market. Even the HNI and the retail end of the market is liquidating their positions. They are sitting on a very high amount of profits. Just imagine last calendar year we added 30% on the benchmark Nifty. So those areas are witnessing profit taking, and most of the experts believe that this patch of weakness may just well continue till at least some more clarity comes in on when the rates will go up in the US economy. Rupee is expected to remain on tenterhooks and Indian equities would also remain weak. The good thing is that this is exactly the time for making long-term portfolio bets, and hence a staggered manner buying is advised by experts. However, for traders, experts say that next few weeks could remain choppy and challenging. So if you trade, then you have to trade with very strict stop losses.
All right, Ajay, thank you for that update. Joining us today, Chokkalingam, founder, Economics Research. Chokka has been recommending stocks and been guiding us through the market for several years now. Chokka, thank you so much for coming in. Well, obviously, anybody who reads the headlines is going to find themselves a little disappointed. The headlines will say things like Sensex down 450 points, the fact that we've had the worst ever week in a very long time. But this is not bad news. This is an opportunity for a retail investor to buy, isn't it?
Certainly. I mean, even in a rising market, you get a stock which have not moved up, available at a bargain price. And two, when market like this, even a good quality stocks get hammered. So this is the best time to buy. But of course, 95% of the retail investors would laugh at me because they won't have money, obviously. So the major mistake they make is that they end up always buying a momentum stock, beyond valuation comfort zone. So that's why they get impacted on days like this, and they don't find, disposable cash to invest. So as long as they maintain the valuation comfort, and this is a great opportunity to invest and make wealth.
So if you're looking at the market at this point, where do you see those stocks right now? The big stocks, the good management, the good balance sheets that are available at good prices?
Certainly. I mean, like we have covered JB Chemical. Last program only we added it. It's a fantastic company with excellent management, investor friendly, strong balance sheet, 500 crore cash on the book, debt was only 100 crore. So these are the kind of stocks we bought today also in this market. We bought Polaris, opened a very high, then corrected a lot. It's trading at around a 7p on 1 year forward earning. So like this, there are many companies. Third company is Engineers India. It has corrected from 340 level to around 210. It's available in the range of 210 to 215. So there are many such stocks. So all of them, the one good thing is that a strong balance sheet and a good visibility on the business turning around also. So these are the stocks one can buy.
All right, these are stocks you can buy. And remember, this is, of course, a great time to be buying stocks in a market like this. Very quick conversation. Of course, Parliament, we know, paved the way for more foreign investment in the insurance industry. What this basically means is that there was a cap on what the foreign partner in an insurance company could invest. That cap has been moved, and now those foreign partners can bring in more money. This means more cash for the Indian partner, and there are, of course, several companies that will be impacted. But Chokka, I'm assuming that this has already been priced into all of these companies. Do you expect any sort of long-term upside over the next 4 or 5 years for companies that have investments in insurance?
You're right. Most of them are priced in, and definitely FDI money would come. Estimate is minimum $10 billion, but the fundamentals are not going to improve immediately. Even the insurance business is limping in this country. But definitely it's a good move, and most stocks are run up, except probably Reliance Capital. If you see whether 1 year high or 3 year high, still long way to go for the company. And there is a lot of association with the Japanese company. I've been saying that politically also India and Japan would forge a relationship much stronger. And because of the stimulus package in Japan, there will be a lot more money. So within insurance play, any company who has got a Japanese joint partner, they would be the major beneficiary. Therefore, probably in Reliance Capital, there is further upside.
There is further upside. Would you recommend buying Reliance Capital at these levels?
I'm very conservative. I don't chase when the stocks move up substantially. So I look for a day when the stock is in red.
All right, so keep Reliance Capital on the radar. If you do see an opportunity,
Definitely.
you're saying, consider it. I want to take a few questions that came in. Shisha wrote in, 1,000 shares of Axis Bank bought at 619 as an average. Should I hold on to that stock? Axis Bank ended the week at 570. 570 on Axis Bank is a great opportunity, isn't it?
Certainly, it went as high as 654, now corrected in the last 10 days. It's a great stock. I firmly believe that in this calendar year also it would outperform the benchmark index. And in fact, if you compare with a small mid-sized bank like IndusInd Bank, IndusInd Bank has got 1.25 lakh crore of business, whereas Axis Bank got more than 5 lakh crore, whereas it is at a steep discount to IndusInd Bank. So I firmly believe that this kind of discount would be narrowed down further, and therefore Axis Bank will do phenomenally well.
All right, let's take another question. Maruti Rao has written in 200 shares of JAY Irrigation, which he bought at 116 rupees. He wants to know if he should hold on to that stock. Now, the stock is going to pop up on your screen. It ended the week around 64. Is it time for him to sort of pack this investment in and say, okay, this is...
I remember many times on the same channel in the last 6 months, I have been saying that, I have nothing against JAY Irrigation company. Yeah. But it's highly leveraged. So I'm not comfortable with the highly leveraged company. Even the economic survey budget, everybody has recognized, corporate sector itself is in a balance sheet crisis. So this is one typical example. And they were not able to reduce the debt also substantially. So what I would suggest is that shift from JAY Irrigation to Arcom. Yes, Arcom also highly leveraged, but at least in the last 18 months, they have reduced the debt by about 13,000 crore.
All right, this is why we take Chokka's recommendation so seriously on this show. Let's talk about his portfolio. This portfolio was designed on the 8th of August 2013. We've been tracking it ever since. It's currently at an overall gain, and I kid you not, of 102%. The Nifty over the same period is up 55%. So it's double what the Nifty has done, literally. I'm going to give you a list of the stocks in this portfolio. There's GB Chemicals, Polaris, South Indian Bank, International Paper Corp, Navigli Lignite, that's down 23%. Bombay Burma is up 130% since we bought it. Emphasis, Karur Vaishya Bank, Barmer Lorry up 83%, Moil, Biocon, KCP Sugar, Claris Life Sciences. That's the list of the stocks in your portfolio. Chokka, this is the interesting thing. Now, we've talked a lot of times about why we have 10 stocks in this portfolio. But if we look at the mix right now, there are some that are doing phenomenally well. And there are a couple of draggers. For example, Navigli Lignite is down 23%. Biocon is down 14%. What is your strategy right now with this portfolio? Do you want to just continue to hold it the way it is?
Definitely. You look at Biocon, it's such a big, pharma company. It is trading almost 2,000 basis discount to small pharma company which have got only 200 crore turnover. So why I could have replaced, I would like to perform better, every time when I come here. Yes. Particularly for Biocon, there are two reasons. One, as I mentioned, it is a huge discount to small mid-cap pharma companies. And the kind of biotechnology company they have set up in last 20 years, it is very difficult for anybody to replicate. Second, the management clearly mentioned that by end of first half of next fiscal, they would list their subsidiary. And, probably in European markets.
In fact, I'm going to give you a quick recap of the stocks in Chokka's portfolio if you want to write them down. There's JB Chemicals, Polaris Consulting, South Indian Bank, International Paper Corp, Navigli Lignite, Bombay Burma, Emphasis, Karur Vaishya Bank, Bama Lorry, Moil, Biocon, KCP Sugar, and Claret's Life Sciences. If you have any questions about that portfolio, feel free to get in touch with us. You know our email ID is at the bottom of your screen. We're going to take a very quick break, but stay with us. After the break, Chokka will tell you why he thinks you should be investing in JAY Bharat Maruti for the long term. That's on the other side. Don't go anywhere. Welcome back. You're watching All About Stocks in ET now. Our advisor, G. Chokkalingam, is still with us. And, we asked him to pick out a stock that he thinks we can buy at the current levels. And he was kind enough to find a stock for us. And he picked out JAY Bharat Maruti. That ended the week at 137. And, this is the interesting thing about having Chokka on the show. He always pick out a stock that's very seldom talked about in the mainstream media. And I think that's the value that you bring to the show. So we're really glad that you took the trouble to pick a stock out for us. Tell us why you've picked this stock, and out of the auto ancillary business, and there are various choices right now in the market. Why does this one make sense?
First of all, the valuation comfort. There are many mid-cap auto stocks are quoting 15 to 25, 30 PE also. This is the only stock available at 7, 8 PE. And management also gives a lot of comfort because it is a joint venture of Maruti. Maruti has got 29% stake in it. In fact, Maruti's the plan to diversify in Gujarat is a positive. A lot of people are worried about Maruti Suzuki because those news plans are part of the parent company. Yes. They may, produce the car using the parent company platform, but ultimately for auto component, they have to come to the existing vendors. And this company has got a very strong balance sheet, and it's on 1 year forward earning, it is available less than 7 PE. And if you look at last 5-6 years, it is more or less consistently growing company. So therefore, I firmly believe that for 1 to 3 years, you can make a lot of, wealth.
Okay, so obviously I'm going to ask you to quantify that. When you say make a lot of wealth, give us a target on this stock.
See, I won't, try to escape. The fact is that, the perception plays a major role in the markets. Yes. I always decompose PE into two components. One is the trend determined PE. All of us analysts put, band and all. The second one is a perception. Like in 2000, Infosys had more than 200 PE also. So that is very difficult to predict. It depends how the herd mentality plays out all that. So I assume that, in 3 years, this kind of company, being a Maruti joint venture, can get even 20 PE. Like there are, you look at the companies like Wheels India. If my memory is right, it should be 25 or 35 PE. At 440, 1.5 years back, no taker. Yes. So that's what I mean. So it also partly depends upon the creation of the perception. If that plays out, the stock can double, triple.
Double or triple, all right. So that's the recommendation for this week, JAY Bharat Maruti, that Chokka has recommended. Remember, this is the only show on television right now where we bring the guest in on a regular basis and take a look at how that recommendation is doing. And we make sure that we keep a list of everything that's said on this show, and we keep a really, really close check on each of those recommendations. You can write that down. If you have any questions, write to us. And the next time Chokka's in the studio, we'll ask him that question based on your email. In fact, Chokka, we have one such question that's come in for you. Chinmoy Chaudhary has written in. He says he bought 100 shares of Precall at 44.82 since you recommended it. He says he's losing money now, that he wants to know what to do. Now, the stock ended the week at around 31, if I'm not mistaken. Chokka, you recommended the stock on the 23rd of January when it was trading at 43. So obviously, Chinmoy has bought it at 44, and he's a little disappointed at this point. And this is also that portion of the show where we ask you to justify what's going on. What would you say to someone who's taken your advice?
Definitely, I like you to, take it back with people like us. When we get a publicity, we should also have onus on it.
Yes.
There were two reasons. Last 2 months, most of the mid-cap stocks were smashed, and there are many stocks 20-30%. But more than that, I should admit the fact that I might have made a mistake of choosing the stock just 1 week before the results, because I have been tracking it for nearly 20 years. So that might have probably given me a little overconfidence. So I chose it just before the results. But my bad luck, the management decided to write off 25 crore of past investments. So I am a bit surprised why they chose December quarter to write off the past investment. So particularly when operating level, they were not able to make much money. So that has hit stock very badly. But I am 100% confident. I believe he should average it down and he should hold on for 1 to 3 years. They recently, acquired a company in Brazil also, in auto component, with the kind of Brazilian currency crashing. That business also should do well. So I'm very confident that it will be a multi-bagger in 2 to 3 years' time.
All right, so Chinmay has bought 100 shares right now that he's holding. When you say average out, what would you like him to add to that portfolio?
Well, I would give, not only for this stock, not only for this viewer, for review investor, for everybody, what I would say that even if I recommend, or anybody, you don't put in all your money
all
in a single
one
day.
go, yes.
One day. So you phase it out. So he can buy another 100 shares now. That is, he can double up his investment by any chance if it comes down. But ensure that the share of the stock in the total portfolio doesn't cross 8 to 10%.
All right, so that's pre-call. Remember, Chokka had recommended this stock on the 23rd of January. He's saying that if you can continue to accumulate this stock, it is going to do well. Don't lose hope just yet, Chinmay. And of course, if you're still worried, write back to us. We'll take up your question again. Vivek Gandhi has written in. He has 80 shares of Hero MotoCorp, which he bought at 2,900 rupees. And he has 350 shares of First Source Solutions, which he bought at 34 rupees. He wants to know what he should be doing with both of these stocks. Let's talk about Hero Moto first. Hold on to that stock?
Yeah, certainly. Unexpectedly now the car is doing well, car segment is doing well, but two-wheelers are not doing well. But I still believe that Hero Motor would improve. They have been going aggressive on external markets. I am confident that they would do. So he should hold on.
Especially now that the finance minister is making those phone calls asking banks to pass on that interest rate cut. It's a matter of time before most of these markets start.
Certainly. A revival of the economy. Yes. The management is now going very aggressive in the export market. So they may get into share of others in the export market. So all this should play out.
What about First Source? Hold on to it.
It's a good company, but in terms of relative valuation, I prefer Polaris. First Source has got a debt of almost around 700 crore. There are hundreds of crores gone into intangible assets. Whereas in Polaris, you don't have any debt. The cash-rich company, cash itself is 30 rupees per share. It's close to 1/4 of the market cap. And it is, in terms of valuation, also 100 to 200 basis cheaper than First Source. Finally, I firmly believe that Polaris can join the consolidation. After the restructuring, the management, the promoters are buying in product company, not in Polaris. That gives me some indication that there could be some sell-off of the Polaris consultant.
All right, so let's take another very quick question. Sanjeev Sharma has written in. He says he holds 30,000 shares of Suzlon, which he bought at 38 rupees and 60 paise. He wants to know if he should hold on to that stock. Now, I'll pull that up for you. Suzlon ended the week at 26 rupees. If we look at what you tell us about fundamentals, Suzlon, given the fact that we are looking at renewable energy, we are looking at, sustainable energy, it has a strong point there, but the balance sheet is not great. And you always tell us to keep an eye on the balance sheet, keep an eye on the debt as well. So would you recommend he holds on to Suzlon any further?
I would suggest sell and get into some defensive, because now almost double from the bottom in a very short span of time. So like the whole market has moved on, hope. Similarly, this company also moved up on the hope. And as we said, there's a lot of debt. And now, that is not the concern. Now, the concern is that, so much of equity, the new allotment and then conversion of the FCB. So, and on the other hand, Inox, if you look at their performance in the recent times, they have been doing phenomenally well in the wind energy. So the strong competitor also emerging. So therefore, I would suggest sell and buy JB Chemical.
Buy JB Chemical. We've already talked about JB Chemical a little earlier on the show. Let's take another question. Shantaram has written in, he wants to buy Tata Motors DVR at current levels. He wants to know if you think it makes sense. Now, Tata Motors DVR ended the week at 337. It's a lot of dependency on the Europe market. Do you believe that that will be able to, the sales there will be revived and that's the business that will turn around as well?
Certainly, there is no 100% confidence, but fact is that they have been doing quite well in Chinese market. And, the kind of stimulus ECB, European Central Bank, is proposing, we have played on US quantitative easing, then we played on Japanese. I think very soon the market will start playing heavily on European stimulus. So this could be a beneficiary. Plus on local market, recently they turned around their commercial vehicle sales. So therefore I would suggest hold on to.
Hold on to it. Accumulate any more or just hold on to it?
As I said, whenever market like this, if it falls badly, you can.
Okay. No, in fact, the question he's asking us is, do you recommend that he buys it at these levels?
He can buy it and...
Now time for another very quick break, but when we come back, we'll talk about Ashok Leyland and Dena Bank. Don't go anywhere. Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. Chokka is still with us. And it's time for us to look at your portfolio. Now, every week we pick one portfolio and we take a look at all the stocks you've sent in and decide whether or not you should be holding on to them. Tanmay is our lucky viewer this week. He sent us a list of stocks he wants us to look at. 100 shares of Ashok Leyland, which he bought, and believe it or not, at 27 rupees. Ashok Leyland ended the week at 72. I mean, it is a great stock to have, but is this multi-bagger enough for him? Should he take some money home?
I feel so, because it's already played out. Now, other players like Tata Steel, even Maruti is getting into, commercial vehicles. So, I think he should utilize this multi-bagger opportunity and he should move on to JAY Bharat, which may not fall badly from the current level, whereas it can create a consistently good amount of wealth.
All right, let's take another stock. He has Dena Bank, which he bought at 84 rupees. Dena Bank ended the week at 52. We did talk about Axis Bank a little while ago, but what's your call on this stock? Should he hold on to it?
I am negative on most of the PSU banks, but I don't want him to lose money heavily because I am very certain that the rate cut would continue. And it's also more than 30% discount to adjusted book value. So he should hold on to it. The moment he gets close to his cost price, he should exit.
All right, so exit at your cost price. Don't sit waiting for some more profit.
Don't try to average it also, because most of these PSU banks, the annual profit itself is a fraction of outstanding net NPA, which is in contrast to the private sector banks.
So if he does exit, if he recovers his 84 rupees from Dena Bank at some point in the next 1 year and he exits, would you recommend then move into another private sector bank? Because they would have also run up a fair amount over this year.
Right? At that point in time, you will have to look at the valuation, price to book value, all that, how much they run up.
All right, so your strategy on Dena Bank is to wait till you recover the cost and then exit that stock. 100 shares of Hindalco, which he bought at 117 rupees. That stock ended the week at 131. So he's making some money here. What would you recommend he does?
Hindalco. Yes. You can sell Hindalco because, in fact, many times we covered on the show last 6 months. Highly leveraged, that is more than 50,000 crore, and valuation-wise, it is costlier than Hindustan Zinc. My choice is Hindustan Zinc, because 7-8 PE and more than 27,000 crore of cash, so that gives a lot of comfort.
All right. Also 100 shares of Tata Steel, which he bought at 321 rupees. That stock ended the week at 325. He isn't making a lot of profit on this stock, and we are constantly waiting for this cycle to turn on commodities as well. Now, given the kind of construction and infrastructure our government is planning, do you expect Tata Steel to be one of the beneficiaries?
It would be, but going is tough for the steel industry because the domestic consumption of steel is growing at 1 or 2%. There is a huge dumping, and unfortunately, they acquired a steel company in European market where neither labor nor raw material are available cheap. But still, I would suggest him to hold. In the 3 months itself, it has been beaten down by 21%. As I said, ECB stimulus also should improve the outlook there. Here, as you mentioned, the manufacturing sector, infra projects should improve the outlook for domestic steel. So therefore, you should hold on to it.
All right, hold on to that stock as well. And if you'd like us to take a look at your portfolio, feel free to get in touch with us. Our email ID is at the bottom of your screen. It'll be our pleasure to hear from you. You can always reach me on Twitter as well. Chokka, I'm required to ask you your disclaimer about the stocks that we just talked about.
Our portfolio, what I have mentioned, I have South Indian Bank and Karur Vysya, Balmalari, Moil, which are bought as per the compliance process. KCP Sugar. These are the stocks I hold.
All right, that's Chokka's disclaimer. Chokka, thank you so much for spending time with us this week. It's always a pleasure to have you on the show. And a copy of this show will be available on our Facebook page as well if you'd like to watch it one more time and take down those recommendations. Send in any questions you might have. Thanks so much for watching.